Trust you are all well, and welcome to Live Trade and Profits. And as your host, my sincere apologies. I'm just realizing I got the wrong background on, so I think we are sorted now. All right, so welcome to Live Trade and Profits. Trust you all well. What a morning we have had. If you're in the market, DAX 30, and we're gonna go through it. I mean, it's pretty unique in terms of how early sessions unfold. It's a tight trading range, but we are in a form of a triangle. Convergent triangle. Yeah, I guess you could even pull that back. And I'm going to open it up just now so that we can look at the entries that we have had. And hopefully, if you're watching this market as the day unfolds, you might be able to pick up some trades because we are in breakout mode. When I say breakout mode, a convergent triangle is a breakout mode. Simply, the probabilities that the day will end up just squeezing and funneling in and ending up just as a tight trading range is pretty low. It can happen. The market can just stay like that the whole day, but that is possible. But in terms of probabilities, that is pretty low. So I'm not going to worry too much about the trade that I'm in until we get there. But because of the trading range price action, I've been looking to take as many of the opportunities as possible. It could be in and out pretty quick because you're not quite clear. You don't know that it's going to end up as a trading range until you start to get into this kind of thing. So I've got a pretty wide stop on it. We might just get several bull candles and get stopped out. Or the bears might accelerate down and maybe we'll find another opportunity to jump into the market. So let's just do that. What I want to do is just talk about the setups as they've appeared and unfolded during the day. This orange rectangle is the open of the German stock market. So this exchange DAX 30 has its own unique open an hour before the UK market opens. This is the open of the UK market. And what I want to do to just avoid myself being distracted, I want to mark, have I marked? Okay. So it's marked where we are going into the trade. Then I want to just ignore it. I want to ignore it completely. So just allow me a second. Okay, so we can focus on just the things that we want to focus on. All right, so the open of the German Stock Exchange, bear candle. I mean, if you go all the way back here, depending how you trade in the Asian markets, that's where the exchange opened. And remember, it opens at 3:15 my time, 9:15 sync time. So just bear that in mind. And the hourly candles change every quarter past. That's something to bear in mind if you trade in the hourly time frame. So right from the open of the day, after that bull candle there, bears sold off, bull candle, eventually the bears sold off again. Pretty strong bull pullback to come back and test what is the open of the day. And at that test of the open of the day, double top, so it's a lower high double top. Pretty difficult to jump in and sell at this particular moment because of the 3, 6 bull candles. So you might have thought, okay, let me wait and see if I can get a lower high. Then the market gapped down. So that's signs of strong bearish pressure. So if you were in this market, I should have put it in earlier. That would have been a decent setup. I'm trying to sell beneath here. Put your stop here and see what happens if you get to test down there. Eventually it did. When another gap down from the close to there, so strong bearish strength. Then you went into this trading range, which is relatively common, before we get to the open of the actual exchange. Bulls try to reverse that, and we get another lower high. So at the open of this exchange, bear candle, at some point, pretty strong bear candle, then became a doji. So start to ask yourself, well, if the bears are strong, they haven't come all the way, pull the market down all the way to the open, why do we have a doji? So if you're thinking of selling, you need a little bit more, see a little bit more strength if you want to sell at this particular stage. So followed up by a doji, tails at the bottom, then we have an attempt to break beneath this tight trading range, beneath this low, and we get a strong bear candle. So if you've been waiting to try and sell, and you are prepared to put a wide stop, then you're going to be thinking of jumping in beneath a bear candle or breakout pullback low 1. That's where you can consider doing that. Bear in mind, of course, that you're about to go into the open of the UK markets. So anything can happen. So again, if you're doing that, then you need to make sure you have a wide stop. A wide stop is up here or right up here by the open of the day. When I took that trade, I just put it, 6 points above the open of the day. So that's when I say wide stop, I'm saying instead of just putting above the nearest taking up level, you might think, who knows what's going to happen at this open. I don't want the market to accelerate up from my entry position that I've taken before the open, and then still accelerate down, and I'm kicked out of a trade that could possibly go my way. So you need a wide stop. If you didn't do that, big bear candle at the open of the UK markets. Now remember, you are trading the DAX, and you've seen confirmation of bearish strength. Follow through candle, doji again, tails at the bottom. So, a decent entry to put in, still looking at trading the open is here. But again, if you're doing that, you're still going to be using a wide stop. So that's the only problem, I guess, with this particular trade at the moment, because of all the trade range price action, the stop is far. Why is it a problem? Because we're going to be comfortable to say if I'm wrong, I can get out, and relative to where my stop is, where I'm getting out, I'm going to lose a little bit. So opportunity for the bears. Now, if you took that and we had a close beneath the this red line is the low of the previous day, low of yesterday, what are you expecting? You're expecting, of course, a little bit more bear acceleration, confirmation by the bears that they are strong. And if you get that confirmation by the bears that are strong, then you can then look to follow through. But immediately it fails. Now, here's where it got interesting right from the beginning. Immediately it fails and you got your stop up here, you got two options, because if you put a wide stop, it means you're expecting a pullback. And if you're expecting a pullback, you can prepare to kind of wait a little bit and see what you get. So bears would be holding onto their trades. If you are not in any trade and you're thinking, this is very weak, I must find a way to, we're coming up to the end of 5 minutes candle. We'll have a look at where we are at the moment. So bears will be looking to hold on, to rely on their stop. Bulls may say, failed breakout, let me look to buy. So now you have a situation where the bears are holding and bulls are initiating new trades. Bears who don't want to hold through this can exit. It's perfectly fine to exit and say, okay, maybe I was wrong, let me wait. Now here's what happened. Tail, bull, why would bull be buying? They would buy because of a failed breakout. They'll be saying, well, I've seen weakness all the way through the day, so I'm going to buy above here, even though there's a tail. Hopefully, we'll get acceleration up. So the bulls were in, bears either holding on to their stop or having exited. And then immediately we get a failure. Now, bulls have a choice, same choice that the bears had. You can exit here and say, oops, I was wrong, or you can rely on your stop way down here. Bears who are not in this trade, who've already exited, this is a decent enough signal, so you can look to jump in there. Now, this thing kind of repeated itself. That was what I was trying to get. Repeated itself throughout the whole day. Good signal for the bears, sell. Now you think, okay, the bears might go and get down here. Maybe you didn't sell there, you can sell here. Failed. What do bears do? Exit or hold on and rely on your stop much earlier on. Bulls, jump in. If you've exited, jump in. Okay, it's very hard to do both buy, sell, buy, sell. So you choose a side and you're not sure what's taking place. You do your analytics, and based on that, you do take your position. I'm going to come back here. Okay. So this is where we're at. So we are currently in that particular trade. And as I said, my stop is way up there. Bears need to do a little bit more. If we get a succession of bear candles, then I might be thinking if I get a bit of a pullback, or if I keep getting bear candles, might be worthwhile to sell. This time, if I add on to my trade, then I don't need to put a stop up there. You can just keep a tighter stop. This is probably a good place. Any of these low highs there, here. I wouldn't put it here for now. I probably put it here, and then just to the left we have that. So 15,750 will be decent enough. So I'll be looking to see if I can add into my shorts based on the strength of the bear selling. So point I was trying to get to is the market has been alternating who's got control. Here, bulls got in and they said, wow, look at this big bull candle. Immediately we have failure. So bears haven't realized we're in a trading range. If you're out, you can jump in again and you're still holding your stop here or even higher. And you're hoping, of course, for acceleration down, just like here, we're hoping for acceleration down, but it can fail. And the market can keep doing that. But at some point, there will be a sustained breakout, either a bear breakout or a bull breakout. And that side that gets that breakout should have much to go. So we don't know yet. It's still too early. We still got a few more minutes to see. And then we got here. So for the bears, they're hoping for acceleration down. And, got a dodgy problem for the bears. And immediately we have to think of getting in or of getting out, get out above a bull candle and then wait. If you try to sell that outside candle with a white stop, as soon as it fails, you got to get out, minimal loss. Now for the bulls, remember the bull case, you're trying to find ways to jump into the market. After that sell-off and that bear candle might be thinking, okay, the bears are strong. They're going to sell off and try and get to the low of yesterday. It's a big magnet, but they failed. So because you're in a trading range, probably best to buy above here and hoping to get acceleration up. But we don't. Distant enough to buy reversal, bears can sell. Distant enough to buy reversal, bulls can sell. So the market is alternating. At some point, I'd say just I'm going to hold on to my trade and see how far we go. So if we start to reverse and start to go up and take out these highs, I will get out of this trade. But if we sell off and we get more opportunities to jump in the market, then I will be keen to jump in again. So that is presently where we're at. What would you do if you're still keen? I think it's probably best to wait a little bit. The bears need to show strength. We need a candle closing beneath its low. We need follow through. Then we can start to say, okay, now maybe we have a strong bear breakout, maybe a pullback where you can look to jump in if not in, or start to get strong bear trend candles, you can still get in and keep your stop up here. But at this stage, because you're still in a trading range, the market can still turn and it can go up and up and up. So that's presently where we're at, one active trade, and I'll keep a watch on it. Thank you, guys. Sincerely appreciate your time and enjoy the trading range price action. Bye-bye. Yeah, we're shutting down, but that's good for the bears. Thank you. Bye.